there's an element of like for traditional servicing systems, they know what the mold looks like and they're pouring the concrete and then the concrete is hardening. And for what's in the mold, like it works really, really well. That's what it's designed for. And to your point, like I think that the credit card example we talked about, the core stuff that we're doing, like calculating interest, doing payments, being able to facilitate returns or whatever, like to be fair, those systems do those things, right? Like they do the things that are like within the box for what it's designed for. The problem is that if you're designing for a specific product.
Well, this is the Kickstarter example, right? It's like if we were making a financial product for the three of us that could only be spent at a single gas station for $20 on the first day of every month with no interest, easy. We literally just create a ledger right now. But what inevitably happens is you get to 100 customers, 1 million customers, and all of these different types of activities start to be happening. So I think about it as like the square rectangle example. Like you can be one thing, but it's very hard to then retrofit your system into these other things. And so tangibly, very, very like tangibly for the piece, I think merchant behavior comes into play here. So whether you're Green Sky or you're Stripe Capital, you develop a product for the single merchant that you have. And that merchant wants a pay in 4. Okay, cool. Now merchant number 2 comes along and they want to pay in 6. And merchant number 100 comes along and they want a 3-year loan that has no interest and no payment. And over time, it just starts to get harder and harder. And at Green Sky, when I left, we had 20,000 merchants. They all wanted different product variations. Right. And so each of these payment terms, AM schedules, fee pouring, grace period, activation date, cycle date, all of those are different, unique products. And if you don't have a system that can flex to it, you're either not creating that product, so you're leaving demand, which is like the point of democratization that hasn't happened, or you're taking up all of this time to try to retrofit your original use case into something that it was never meant to support.
And when we talk about like standardization, basically what we're saying is that like something like a credit card, it's a very tried and tested product construct that we've built systems that democratize your ability to offer credit cards. So like we know what a credit card does and looks like and is, and we've tested all of those use cases. And so when you go to someone like a TSYS, yeah, they didn't build the system to facilitate new ideas, but they built a very sort of robust system for managing one that there already is. So it's kind of a combination of the problem of scaling something that everyone wants slightly differently, which requires sort of standardizing on a product concept, and the nature of servicing a financial product, which is you can't screw up at all. So like it's the combination of those two things fundamentally, where it's like, on the one hand, as we scale up, we're getting to this thing where if we don't standardize it, there's no way that we can like, have like a unified experience and like servicing around it. And if we do that, if we build that, it needs to be really, really low fault tolerant because we're servicing financial products and we can't screw up here. So the combination of those two things tends to create very rigid systems that aren't built to handle new use cases or new ideas. Is that a fair way to summarize that?
Yes. And I think the two other points to call out is they were never really meant for commercial use cases at all. So like that just didn't exist. Like what is happening now on the B2B side in fintech is really a green space that I am immensely excited about, because you can't even reference what these systems were doing because that they were meant for consumers.
Well, and that kind of speaks to the fact that commercial lending way back in the day was all manual relationship paper-based. Like there were
factoring. Exactly. You were like trusting that you were going to get, taking someone's invoice and giving them money and that you were going to get paid back. Definitely. And I think that the other piece to it is that outside of the system being robust, it is also incredibly rigid. And so like the ways that people are handling digital lending and what they're doing with data, it was never even like a thought, 20, 30 years ago. You weren't creating text messages to let people know that they're 2 days late, but then not pulling the auto pay because Plaid didn't check their account. Like none of those type of experiences existed. And so,
well, to your point, like the digitization of all of this has made it possible for things to be much more adaptable. And I like that term adaptable, where it's like, now consumer behavior can adapt and sort of flow around whatever the situation is. But these systems weren't built at a time where that was a realistic expectation.
exactly.